Yeah, all right. I don't think we really have that much time, and my battery is running a bit low. But anyways, so what I wanted to show you guys. So this is going to be a recorded video. For those who have missed it, they can always go back and watch. It's not even going to be something that long because I just want to explain a few things. Because I see a lot of people want to find out how to go about the whole thing. So so we'll start with this way because I'm being questioned for things which are straightforward. Like you can even see. So what I always say, okay, this thing, I always repeat myself. I always like whatever I'm going to say, it's just going to sound more like a broken record because it will sound familiar to the people who have been following the videos on YouTube. Because I have nothing much to explain at this moment. I'll just repeat myself over and over again. So the way we started, and on the basis of you guys joining the mentorship, I always say, I'm not here to give you the fish, but I want to teach you how to go about the fishing. So the system has already been made for you guys. Templates have been shared, everything, all the files have been shared. So so now the only thing remaining is now you guys taking the trades because I believe most of you do understand how the system works. The only thing which you're lacking on is the confidence. Is the confidence, and some of you are actually looking at where the time frames to take a trade. Like I always say, 1 minute is for scalping, 5 minutes is for scalping, 15 minutes is just for scalping. Then when you go above 15, let's say 30 minutes, 1 hour, 4 hours, at least these trades are going to be the long trades. So if you take a closer look, you're looking at it in the 5 minutes time frame right here. So if you go down to the 1 minute, this is what you're going to see on the 1 minute. So on the 1 minute, you're going to see that starting from this point. In fact, I like doing this when I'm explaining so that you can see, so that you can see exactly what I'm talking about. So so one side is going to be the 1 minute, then the other side is going to be the 5 minutes or the 15 minutes, depending on the time frame. Okay, so yeah, right at this point right here. So I'm just going to do this. Yeah. So you can see from the point here, the first signal which was given at this point in the 1 minute right here on a sell. If we put by let's say sell limit at this point, because we want it to reflect on both sides. Want it to reflect here and there. So you can see how the market was moving. Here we have an IFC candle, meaning when the market comes back in this point here, there's going to be a reversal. Before it breaks above, it's going to be a reversal once the market comes back to this point here. So just wait on this one. You can set this sell limit at this point. When the market comes back here, it will trigger a sell. It will follow through. It can go all the way to this point, but it won't surpass this point, and it will drop all the way down. So this put in mind. So so now so like I'm explaining. Let me focus on the 15 and the 1 minute, between 15 and 1 minute. So on the 15, you see what's there. 15, we can see that the signal is given, and the signal has always been a sell, has always been a sell. There's a minor retracement from this point to that point, but still the market has bearish power. So if we take the trend line, we put our trend line at this point here, from the highest point, and if you remember, like I'm going to say, I'll sound like a broken record because everything I'm just going to repeat myself. There's this one, the circle with a star. The moment you see this one, this indicates the highest point of the market or the lowest point of the market. So if you're using your Fibonacci, you can use that to identify the lowest point and the highest point of the market. Then using that Fibonacci, it will show you the levels where to buy and sell and where to take your TP. So you see, so a trend line from that point to the second touch, from the first touch here, from the highest point to the lower high, which formed here, then another lower high. It didn't break the previous high, so it just went all the way there. Then we have this one, which is in line with the previous uh, the previous high, lower high. So you can see that it has respected the trend line. Then if you draw a bottom trend line, you can see that there's a breakout which the market has to do a reversal, a retracement. Ish, is this on my way? Move, 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 move somewhere else. Side control. How do we do this now? Need this one. Hide, 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 hide. Oh, all right. Perfect. Ah, so if we do it from that point to that point, you can see after the break here, we can see the market wants to come retest, from that retest to go down. Then from that point, when it breaks, it will still range around here. Like I said, the market has to come back to this point at some point. It has to come back here. So, sorry about that. Network is doing something else. So, like I said, this is just going to be something fast. I don't know if my explanation has, if my exp if my explanation has come through. But anyways, I'll check and review the video. But anyways, let me repeat myself. So you see, as I said, at some point the market has to come back to that point. You see? Anyways, we can also see at this point here that in the 1 minute the market is consolidating. So after the consolidation, that's when now we see the market changing its character. But like I said, 1 minute is for scalping. So if you jump in from this point going all the way to that point, you see the problem with let's say the mindset a lot of people have is they want to complicate things. They want to seem as though they know better than others. That's where the problem comes in. You see, if you take a closer look, most profitable traders, they don't stay long in the market. The day traders, intraday traders, they don't stay long in the market. The graphs you see, pay attention to the time frames. I see a lot of people sometimes they don't really show you the time frames, especially the people who share results on the trading view and the like. They don't show you results. But if you just look at the movement consists on lower time frames. It's rare to see someone using the high time frames, and I'll give you an explanation why that is. You see, imagine this is a 15 minutes we're looking at, yeah? You can see that the market is in a downtrend channel. This is a bullish trend. So now, this same one, the ones I've plotted here in the 15 minutes, you can see my case here. If I go to, let's say, 1 minute, I mean, 1 hour, 1 hour time frame, you see now what has been happening. From the highest point here, we have the signal to sell. In fact, coming from all this point, like I said, when the exponential moving average is above the candles, whatever trade you're going to take, focus on the sales. So you sell at this point here. We're definitely looking at where we have plotted out our trend lines. This area right here. You see, you jump in at any given point. You jump in, boom, you're in a sell. One of this one candle completes. Another candle comes through, it completes. You see, the next candle comes and it comes back like it's reversing all the way back to this point. So now imagine from this first candle, you have profited. Let's say you've made about approximately $40. You see? So now at that $40, you risk losing all that $40, or maybe to 10, $5. From that 40, you come back to $5. Then from that $5, look at the hours. We're talking about hours. This is 1 hour, 2 hours, 3 hours, 4 hours, 5 hours, 6 hours. You see, Same trade, 6 hours, you're holding on that trade. 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15 hours, you're holding on to that trade. You see, it comes back again to your profit level, profit margin. Maybe you've made somewhere 45, 45, it goes back again. You see, creating another problem. So from this point, you've made $40. Then you've lost that $40, maybe you're to $5. From that $5, you made 45. You see, that 45 comes back again. You somewhere maybe $7. That $7 now you break even. From that, let's say $45, now you're running somewhere $60. You see, so now the problem is if you are if you are a day trader, then you want to see the profits. Look at how many hours you're going to lose out on a single trade. And just to make those small amounts. One thing I'm just going to tell you, and I'm going to be clear to everyone. When you want to swing trade, when you want to swing trade, your account needs a certain amount of money. And the money you guys fund, let's say you're funding something like 1,000 and below, that won't cut it. I'm telling you, straight up. If you're funding 1,000 and below, then your account won't be enough to hold a swing trade. Because the problem which is going to be there, there are going to be minor retracements in the market, and those minor retracements are going to affect your profits. You see, this is just one example I've given you here. We are going to find multiple times, while the market is going to consolidate. Yeah, let's say like most of the times when I say, okay, the market has reached its highest point, and at this point, the market has to drop all the way down. So let's just say from this point here, you enter exactly as you can see from the fib. There's a, how can I do this? It's, okay, so as you can see, I don't know if it's visible enough, but in fact, let me just put this one down. Okay, somewhere here. Yes. So if you can see here, from this point here, you can see that I think, yeah, I posted this. This was based off some trades I'd taken. So entry one and entry two. You see? Then we have first TP, then we have second TP. Then the market came back to our first TP here, made a verified resistance level, then went all the way down. So let's just say you jump in according to what Fibonacci is giving you at this point. Let me zoom in. You jump in with oh, this has to go down now. All right. So you jump in with the sell. You jump in with the sell from this point. Then you jump in with the second sell from this point. Then you wait for the market to go down. You see, you're going to find yourself in all these profits, yeah? Profits, profits, profits. Then when the market retraces back, all these profits, you're going to lose them. Then it goes all the way down like that. You see, this is 1 hour for swing traders. It's more like an entry, confirmation entry point. Because mostly for swing traders, we're looking at highest time frames like a day time frame. We're looking at holding trades for a week. So if we look at it at this point here, you can see that it's making more sense if you're looking at it on the daily time frame. Because on the daily time frame, you see that the market has created a high. From that high, we have a signal. From the signal, it touched the first entry. So you're taking the entries from the top of the candle, the daily candle. And from that top of the daily candle, the market goes all the way down. This looks like more like a small retracement to you. Because we're looking at this. We're looking at 1, 2, 3, 4, 5, 6 days in a trade. So we're looking at you trading for a week. So if you look at the weekly candle is going to be a bearish candle. You see, today is Sunday, so we have a new candle for the week. So yeah, so if we look at the previous candle, it's a bearish candle, as you can see right there. It's a whole complete bearish candle. So it's following suit with signal from the previous signal we got from that point when the market started collapsing, going all the way down like that. You see? Yeah. So now, so for those who have the system, one thing I'm going to tell you about the highest time frames, how to spot sniper entries, like how to know, like the way I present my signals sometimes, where I say, guys, in the next 2 hours, this is going to happen, and it happens. It's easy. It's all about backtesting and understanding the market structure and understanding the strategy and the system how it works. Since I made the system, I know I know how to go about it. So there are some certain things I would see in the market, and I would definitely know that the next candle is going to form like this. No matter what's going to happen, it has to do that exact same thing. And this is why most of the times I have an edge when it comes to trading. I know, and I'm 100% confident to say, when the market reaches this point at this particular time, it's going to behave like this. Because I do understand market structure. Being the author of all this system you're seeing here, I'm able to understand, and it makes things simple for me. So now I want to give you some insights in the whole basis of this Zoom session we have today is to show you guys how to do it yourself. You don't have to rely on me. It's the reason why you paid for the system, and you need to understand what you paid for and how to make it work for you. So yeah, so now here we go. Um, I've always told you guys, the red candles and the blue candles, they indicate bearish power in the market. So, um, this this one here, if you see a candle with a star, a candle with a star, especially because this is a week, huh? This is a week. Uh, I keep on having these network issues. I don't know what's happening. Don't know what's happening. You guys pray. Your village people are trying to fight us right here. But anyways, I'm not going to let them do that. Okay, so